Your 401k is being stolen from you. Private equity firms need bailout, and your 401k will cover the loss. Hello guys, hello, my name is Joe. I talk everything about geopolitics and macroeconomics, and in today's episode, previously we talked about how the companies are collapsing under the pressure of debt and how the private equity firms are basically offloading this debt on these companies and how they are also in a big trouble. And in today's video we will talk about the next move of the Trump's administration and how it is trying to bail these private equity firms. These private equity firms, a lot of them are connected to JD Vance. They have all lobbied in order to put him as a vice president. A lot of these private equity billionaires are backing up JD Vance, and they are trying to put in law a new possibility for their own bailout. Now first we will watch a tiny little video, and then after that we will slow down a little bit and we will go over the information with a little bit of a slowdown, and we will explain certain things with a little bit of a slowdown so that we all are caught up to all of these facts. Let's go.
For the past several months, I have been warning everyone that the private equity industry was creating a massive bubble in our economy that was about to pop. Well, it just went. And right now, they have sent all of their lobbyists to Washington, D.C. to beg the government for a bailout. And it's happening. Donald Trump and his administration are issuing an executive order that will take $12 trillion of your retirement savings, not taxpayer money, your money, and it will bail out not only the private equity industry, but their biggest investors. They're going to bail out Harvard and Yale and every billionaire investor private equity is about to grift. Let's get into it. That's right, everybody. Trump is set to issue an executive order that will open the floodgates and allow private equity funds to access and tap $12 trillion in 401k holdings in America. And the same people that control your 401ks have debt that is stuck with private equity right now, giving them poor returns and in desperate need of a capital infusion. No conflict of interest here, everybody. Just look the other way. Private equity is in big trouble. They need a bailout fast, and you are their only hope. But don't worry. Don't worry. It's going to be good for you. It's going to be the deal of a lifetime for you. That's right. Harvard and Yale, they're trying to sell their private equity funds and no one will buy them. But if you help buy them, you're going to get 1,000% windfalls. 1,000% windfalls in a day. Because definitely, if the wealthy had a chance to make 1,000% windfalls, they would absolutely be sharing it with you. They wouldn't keep it for themselves. They want everybody to be wealthy, obviously. And that's why they're promising 1,000% windfalls that will make your brain melt if you just let them have access to your 401k. So how did we get here? Well, over the last 30 years, private equity as a sector has been able to run roughshod over the entire American economy. They have strip mined every single industry with unmitigated access and absolute clearance by every single politician they have paid to clear the runways and give them clear skies to do whatever they wanted to do to the American economy. They've destroyed jobs, they've destroyed companies, they've destroyed communities. But they did all of that with record low costs for debt. The interest was almost zero. And so with cheap debt and the belief that they'd be able to refinance if anything ever went wrong, they've been allowed to do this with no real concerns until 3 years ago when our interest rates started going up. Debt is no longer cheap. And at this point, these companies have leveraged billions and billions of dollars onto all of the things that they've acquired. And they're paying double-digit interest rates, sometimes between 14 and 21% at this point, because they took on all this debt at adjustable rates. And those adjustable rates have come calling. And where they used to be able to turn over every company they acquired every 3 years, now no one is buying. The institutional investors and the wealthy are saying we're out. Harvard and Yale are saying we're out. And what we have is a bunch of private equity funds that are desperate to close out their funds and close out for their investors, and they're stuck. Nothing is moving because there's no money coming into the industry, and they can't borrow anymore because the interest is too high. And that's why the only hope they have is you. One of the questions that I get all the time is, how does private equity make their money? If they destroy all these businesses, why do they still get so rich? And the reality is that what happens is that private equity makes their money on their fee structures. They don't make the money on the success of the companies they acquire. They can strip mine all of it. They can dispose of all the assets. They can leave rubble in what they've acquired because they make their money on the fees. Whereas a typical 401k, you would pay maybe 0.5% or like maybe 0.6% of your investment in fees. But with private equity, you pay 2% of the total amount you have invested annually, and you pay 20% of your returns. So just as an example, if you invested 50 grand with your 401k and it was just standard investments and you made $150,000, over 10 years, you would pay about $7,700 in fees to the management of that fund. But in private equity, you would pay $52,700 in fees over that same period of time, meaning that on average, you're going to give 60% of your returns just to the money managers at the private equity firms. And that's why they are so desperate for your 401ks. They need the capital, but they also need the fees, and they need you to pay them.
Now that was a lot of information, very, very fast. So we will try to slow down a little bit. But I just want to say the video is absolutely amazing. It's full of information and a lot of it is fast. But right now we will just slow down things a little bit. We will just put certain terms in place and explain certain things. So let's go, guys, let's go. Private equity firms are basically hedge funds, but they only buy companies that are not publicly listed. Normally companies are publicly listed, they have a stock and everybody who is interested could buy or sell this particular stock. And so the free market, the stock market, basically ensures that generally speaking there is a reason behind why this company is this valued and that valued. Sometimes we can argue if they are overvalued or undervalued, but generally speaking there is a certain amount of reasoning. True, there is a reason why they are successful or not successful, and it is usually reflected in the price of the stock. But in the private equity sector, basically these companies are not public. They tend to be smaller companies, and so you don't see inside of these companies. They are not as transparent as they have to be if they want to be listed on the stock market. And so there might be a lot of secret debt, there might be a lot of infrastructural issues, failures, business failures that we might not see at first glance. Now, generally speaking, these private equity firms, these hedge funds, private equity hedge funds, they usually, in a good economy, in a fast-growing economy, they are trying to invest into new startups that are like hockey sticks. They have a huge growth. But ever since the lockdowns, the business is shut down and we have been in a silent depression. There has been lack of growth. So they are no longer as fancy startups, as fancy companies that would have a hockey stick, that would have a huge potential, huge growth. And so instead, all of these private equity firms have started to do a lot of crypto ventures. You know, they were doing a lot of crypto scams, or they were, cannibalizing all the existing firms that are under a lot of pressure. They are already having a lot of financial burden. For example, like the Red Lobster, they will basically take a lot of debt and then buy the company and then offload the debt on the company, and then they will cannibalize it. They will extract all of the assets, like the location, they will sell out the real estate, and they will basically offload all of the debt on the company and then allow it to fail, allow it to go bankrupt. But meanwhile, they had made a lot of money on their fees, on their structural fees, and on the actives, on the actives and passives. Like for example, the real estate, they will basically cannibalize these companies that are already under a lot of financial pressure. Now the biggest problem, the biggest number one problem with private equity is that these firms, these companies that are not publicly listed are not liquid. That means that not everyone can buy them, and there are only few amounts of buyers, and so some firms are just straight up unsellable. you cannot sell them to people because they have usually a lot of debt, or they are not promising as much growth, and so they are very hard to sell. And so if you would for example try to list them, if you would go IPO and try to list them on stock market, they might be their valuation, which is inflated, might come down, and this would mean a lot of loss, true loss, that you cannot hide for the private equity firms. And so they are struggling to either go public or sell them to other companies, because these companies are they are increasingly under much more pressure. They are, as we talked about it in the previous video, they are collapsing under the weight of the debt, under the weight of the debt trap. And so what they decided is that they will offload these losses onto your 401ks. Basically, they will list their funds in the 401ks. You will be able to purchase these funds. So they are hoping that there will be influx a lot of money. They will charge a lot of fees on this money, and then if basically eventually these companies will start to fail because they will just go under because of the pressure of the debt. And these billionaires already reap the benefits on the fees. They will already basically tax you on the fees of your 401k, and the losses will be basically written off on your 401k. And even if the private equity firm has a bad years or loses a lot of money, the billionaires will still make the money on their fees. They will still profit on their fees. Even if their private equity firm fails, they still made their money on their fees, and they can just start a new private equity firm. You know, one will collapse, next one will start. They can start with a fresh sheet of paper, but you will carry on with the loss. The loss will be written off on your 401k. You will basically carry the burden of this debt. And so this is quite dystopian. This is truly dystopian. Basically, the billionaires are starting to cannibalize all of the businesses around you. That's why everything is becoming more corporate. And the billionaires are right now struggling as well. Their firms are struggling. So they are trying to pressure the government in order to cannibalize your 401ks as well. They are directly going after your money. So it is becoming quite dystopian. Guys, one last point that I really want to stress out. This is extremely important. So guys, truly listen up. This is extremely important. Obviously, you all know me as the smartest and brightest YouTuber on planet Earth. But all of you, this is extremely important. Pay close attention. But you will be actually surprised that I am a writer too. I write a blog. It is amazing, unique, and everything you ever wanted. Only the brightest and smartest and the most gorgeous people on planet Earth will be able to appreciate it. And so if you are one of those people, definitely check it out. Also, make sure to smash that like button, make sure to smash that subscribe button, make sure to check out the video here, make sure to check out the video there and everywhere. And guys, I will see you in the next one. Bye bye.